trading prior to economic reports. So again, at other times where you know the markets might go sideways, like prior to reports of high importance, you can obviously go and do something else and avoid trading before the report comes out. You can set your trades if you want. You can set your trades like we did last week, cautious trades prior to the report coming out, but then you can then switch off, take a break till the report comes out. So usually periods like that, you can use that as a chance to take a break from trading. So public holidays, days where reports of high importance are coming out, you can use those times as times to take a break from trading and recharge your batteries. So that's another tip I'll give you, because sometimes if you're watching the market too closely, you can then get drawn in and start to make mistakes if you don't take a break. So yes, those are the good times to take a break. Public holidays like today, Martin Luther King Day in America, well, you might just decide, I won't trade today. Times prior to reports of high importance, you can also decide the times you'll take a break from trading. So you just give yourself some time. So apart from the Martin Luther King holiday today, you can also see today is Monday, the 17th of January. We also have at 4 o'clock this afternoon, the Euro area finance ministers meet in Brussels. So it's just a meeting, obviously, of the finance ministers in the Eurozone. Obviously, if they do decide something dramatic or something dramatic happens there, it could affect the Euro-US dollar, which is the currency we're keeping an eye on. So that's something of high importance at 4 o'clock today, which, like I said, could affect the Euro-US dollar, which we're focused on. So for two reasons today, we have to tread with caution. So one, because it's a public holiday in America, and two, because of this finance ministers meeting in Brussels at 4. So two good reasons why you have to be extremely careful trading today. So you really have to approach the market with extreme caution, or probably just avoid trading. Again, that's always the biggest problem with traders, is knowing when not to trade, and me being careful to fold their arms. There's a question here, is there a website where we can know American public holidays? I'm sure if you Google it, I don't know personally of a website. Usually the major holidays are announced, and you easily find out that when the major public holidays are. But I'm sure if you Google it, you can probably find a calendar or chart for American holidays or UK holidays. But dates that can affect the market as a whole, like I said, the economic calendar is a good one, that it shows you things, times and days that can affect the market, and public holidays. So those are major ones. Public holidays and the economic calendar will more or less protect you from expected events in the market. Obviously, it's difficult to find out every single thing that's going to affect the market, because some things are not planned, some things come out of the blue, some things are impromptu. But the best you can do, obviously, are public holidays and planned economic reports. I think once you cover those two things, that would prevent you from the vast majority of things that can affect the market. So with that in mind, like I said, we're going to trade very carefully. So we're going to go to our charts. Let's start with the 1-year daily chart for the Euro-US dollar. So like I say, we're concentrating on the Euro-US dollar. So we can see the market was initially trending downwards, got to this point, and it's trending sideways. And at that point, broke the moving average 50. It's gone up. Made a high there, it's pulled back, so we don't know if it's going to come all the way back down or just start going sideways. But from a swing trading point of view, you can sell at the Fibonacci retracement if it falls. So if it breaks the moving average 50 and falls down back to the Fibonacci retracement at the 38.2% retracement, you can sell there. So that could be a potential sell point. Obviously, to buy, you have to wait till it gets to the 23.6% retracement before you buy. So those are the only possible swing trading opportunities at the moment, to either sell at the 38.2% retracement or buy at the 23.6% retracement. So we haven't got a clue which way the market is going to go at this point, because obviously it's going sideways, so we don't know if it's going to go up or down. Sometimes you could draw horizontal lines and try and map out a channel for the market. We can see here this is the most recent high point there, and most recent low. So we can see obviously the market starts trending sideways within those two lines. You might also be reluctant to trade using this Fibonacci retracement, because you can see it looks like it's now within that sideways trend. So that's for the 1-year daily chart. So at this point in time, we don't know if the Euro-US dollar market is going up or down. So yes, it's currently going sideways. So we can't tell which direction it's going to go, because it's currently just going sideways. So it's anyone's guess which direction it's going to go. So for day trading, we'll come down to the 2 days, 5 minutes chart. As we can see, the market was trending sideways on Friday. Earlier this morning, I just drew horizontal lines at the high point of the sideways trend and the lowest point. By that point, this was just the lowest point. I was waiting to see if it will form a support, because that's just the high and just the low of the sideways trend. But that is not a resistance, and that is not a support. So I won't be using that to trade. I was just wanting to see if the market will form a support or resistance before I trade this market today. So I've put a horizontal line at the highest point to see if the market will get there, form a resistance, and then come back down. And now I have to move that. We can see, well, it hasn't formed a low yet. It's still, I have to wait for it to rally back up, and then when it rallies up, then you can see if it then forms a new low. So at the moment, there are really no clear trading opportunities on the Euro-US dollar today. And like I said earlier, because it's a public holiday and there's a meeting of the finance ministers at 4 o'clock, it's, from that point of view anyway, it's not a good day to trade. So combine that with the pattern of the market. You know, again, you just don't want to take chances. It's always good practice to look for clear trading opportunities. Don't force trades. If there are no opportunities to trade, there are no opportunities to trade. Tomorrow is another day. The stock market is not going anywhere. It's been around for a very long time, and it's going to be around for even in the future for another long time. So always remember that tomorrow is another day. There are always opportunities in the market. So don't force trades. So like I said, going back to what I was trying to say, initially, if the market had formed, if the market had gotten to that point and it had held, so that point there had held and it had formed a support and the market had gone back up to form a clear support, then we can use it to trade. Or if it goes up, hits that high and it holds and forms a resistance, then we can use that to buy. But till then, we're just going to keep out of the market. So this might be a potential new low, but we'll see. So the low there is 13,297. But again, like I said, that's just a low point. You can't tell if it's going to form a support. But don't forget, each candlestick is 5 minutes, and the 5 minutes is not up yet. So we have to wait for the end of the 5 minutes before we can then tell the low point for that particular candlestick. It's going to finish forming in a couple of seconds. There we go. So the low there is 13,295. Okay, so that's the new low. So one strategy, like say, you can use today is to wait and see if that forms a support. So we can delete that low. So that's no longer the previous low. This is now the recent low. So one strategy you can use is, which is will be the best today in view of all those factors I've told you about, public holidays, report coming out. The best thing to do is to either use the support of the market. If the market forms a support, then you can place an order either below the support of the market and then sell if it breaks the support. But till then, it's best to keep out of the market. That's the best strategy to use today, support and resistance. So if the market forms a support, you can sell below the support. If the market forms a resistance, then you can buy above the resistance, but till then you keep out. The other strategy you can use, but this is more risky, the riskier strategy, is using higher highs and higher lows of the market. So you know that if the market is downtrending, it makes lower lows and lower highs. At the moment, it hasn't started doing that. Because if you can see here, it was going sideways. So this is the first low, and then it's made a high. Now that's a new low. So you wait till it forms a new high, and then you can sell if it breaks this recent low. That's using the lower lows, lower high strategy to trade. But again, that's a very risky strategy in view of the factors of today. The trading conditions today are not conducive for using lower lows and lower highs. The best time to use the lower lows and lower highs to trade is if the market, if the market conditions are right, and two, the market is clearly trending, either trending up nicely or trending down nicely, which is not the case here. So again, that's the thing about trading, is to try and make sure that whatever strategy you're using them appropriately at appropriate times. Any questions?